But let's also stick with the capital markets theme as a whole, because we are seeing that Jefferies has come out with a note on the financial services companies, and we are seeing that they have initiated coverage as well as maintained coverage on brokers, asset managers, as well as exchanges in this particular note. Now, for Go Digit specifically, they've maintained a buy, but they've cut the target price to about 360 rupees per share from 390 earlier. The other stock which they have maintained buy is HDFC AMC. Another buy rating it with a target price of 5,000, but that's also cut from 5,450 earlier. ICICI Lombard is the other stock. Target price has been cut from 2,600 to 2,500. And finally, on 361 WAM is another one. They maintained a buy with a target price of 1,350, but they maintained the price at this particular levels as well. And what's interesting is they've maintained 3 to 4 key points in this particular note. The first one's, of course, that in 2025, fintechs will effectively see core margins expand and new initiatives will break even. That's one of the key positives that they're taking from this particular report. Apart from that, large general insurance players are expected to benefit from reduced competitive intensity going forward. And finally, life insurance should start this year, with the overhang of distribution where clarity is something that's needed. That's one of the key things that they're maintaining, and that's something that's been going on over the past couple of months as well in terms of media speculation on that kind of regulation to come in as well. Especially on exchanges, they maintain that margins can gain from SEBI's new F&O measures since the curve has come in now. And finally, on wealth managers were expected to benefit from structural as well as cyclical tailwinds along with new initiatives to scale up as well. But let me go across to Sharmila for all these stocks. Sharmila, on Angel One and Anand Rathi, we did see the market not being enthused with Q3 results. What do you also make from a few of the stocks that I mentioned on the exchanges as well as the asset management side? And what is your preference in order in this particular theme of capital markets?
Well, I do like the theme as a whole, and I think that when you talk of broking stocks, we have to understand that in a sense it is we are going through some sort of a transition period because SEBI has come down heavily on a lot of things, and the changes that they're making, how they could impact F&O volumes going ahead, and increase in contract size, a whole lot of measures which are happening and will continue to happen, because when you kind of attract the kind of retail interest that we have over the last 3 or 4 years, it is, I think, to my mind, a good it's a good thing really in the long run that the sort of the people who are in charge, the authorities, they take note of it and they build in measures that protects minority retails, the smaller investors, and they seem to be doing that. It will be, as I'm saying, it will be a process where you're sort of transitioning. So from that perspective, there could be a bit of a slowdown in the kind of stock price movement that we've seen over the last 3 or 4 years. But Angel One, I think, is particularly interesting because I think that the new appointment that they made, if I understand correctly, he was somebody who was in charge of GPay, and if he's coming into Angel One, maybe they have something interesting planned, or there is some new strategy on their digital front which you could see play out over the next year or so. So it's, I think, to my mind, quite an exciting appointment that they've made. And as I said, I think I stay positive on this space. Again, insurance is a piece that I like. Over there, probably I prefer life insurance more, and within that space, I think SBI Life is something that I like the numbers and I've been tracking it for a while. So I think that looks good.
Right. Thanks, Sharmila. Stay with us before we go ahead to across to BSE with Harsh. But very quickly, just pull up a Container Corp on the screens. You have their volume numbers that are out right now. Clearly, in terms of the business update, the total volumes are up around 11 to 12%. And that's the number that we're picking up. And the stock is at the day's highest levels with gains of around 3% coming in there. If you see in terms of the EXIM volumes have seen a growth of around 8% on a year-on-year basis. The domestic volumes have seen a growth of around 24 to 25% in terms of year-on-year. And if you see on a sequential basis as well, it's 5% and 18% respectively. So strong growth coming in terms of where container volumes are concerned. Sharmila, a quick one in terms of Container Corp, your view.
It's a stock that I've liked. I've not seen the valuations recently, but given the business that they're in and looking at where we are, in terms of whether it is logistics or this entire space, it's a stock that I continue to like.
That's with regards to where Container Corp goes. But staying with the financial theme, you have a BSE. That's an interesting one to watch out for because Jefferies has come out with a report on BSE and is making the exchange buzz and trade. Jefferies has upgraded the stock from underperform to hold and increased the target price. Harsh is back with us. Harsh, why is Jefferies positive? The stock is up 6%.
Well, 6% yesterday, but that's also on the back of the fact that yesterday, despite weak markets, we saw the stock do fairly well in trade in relative terms. Why is this so? First, your new F&O landscape, of course, Jefferies believes is going to drive a divergence with regard to how different players will perform. Within that basket, exchanges will be better off, is what Jefferies says. They believe that the F&O measures impacted option volumes, yes, but premiums are down just about less than 10% January month to date. This is because also that traders and hedgers have moved to larger average ticket sizes when it comes to their trades. And this kind of impacts exchanges because it gives them stabler top lines. Larger margin expansion is also expected to follow through given that the quality of premiums are better. There are longer duration contracts as well, and therefore all of this should start to play out on the numbers of the exchanges. Discount broking volumes, yes, will see an impact, and therefore you will need larger price hikes there. Neutral for asset managers, very positive on BSE in particular.
Right, so that's with regards to where BSE goes. Thank you, Harsh, for getting us the details.